ESG is ESG. It's not just E, because for so long it was, oh, well, if we do some renewables, we've met the ESG. And it's like, no, there's D and I, and there's a lot of different aspects to ESG. And it goes to the adage, right? If you don't measure it, you won't achieve it, or you're not really doing it, right? So it's a matter now of measurement.
Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Welcome to Energy Unplugged. I'm John Feddersen, founder and chief executive of Aurora. And my guest on the show today is a managing partner at one of the US's leading energy transition investors. Before this, she had a long and distinguished career in the power sector over almost 3 decades, including as senior director at Patent Development, which is one of the US's most prolific and successful developers of the past decade. She was in power marketing and origination at Barclays and Fortis Banks. And from the mid-90s, like many of the energy sector's leaders right now, she was in Enron's business in power trading and finance, among other areas. Before her business career, she was a first lieutenant in the US Army from 1988 to 1991. My guest on the show today is Kellie Metcalf, managing partner at EnCap Investments. Welcome, Kellie.
Thank you for having me, John.
Great. So I'd like to start a really interesting career, particularly around the US Army. So you started your career as a first lieutenant. How do you think this prepared you for your later career in the power sector?
The military, I think any young person going into the military, whether as enlisted or officer, gets a pretty broad-based exposure to a lot of different challenges, frankly. For me, it opened up kind of my eyes to a world I hadn't seen in leading people from different backgrounds, in different experiences. And I actually, in my tour of duty, went over to Europe. I was stationed out of Germany. So it gave me kind of taking me from Phoenix, Arizona, where I grew up, an Arizona State undergrad, to first to the East Coast for training here in the US and then over to Europe. So it opened up my eyes to a more global and macro vision. And my responsibility in the military was leading a platoon that was responsible for delivering petroleum products to the front lines. And that really was the beginning of my energy career, because it became clear, and anyone who's a fan of history and reads history understands that armies move on petroleum. And so from that point on, I looked at the landscape and was very interested in the geopolitical and macroeconomic impact of the energy industry. At that point, it was petroleum. I mean, that was, late 80s, early 90s. There really wasn't much of a renewable world. So it was really what we call old energy now, so petroleum-based energy. But from that point on, I was very interested in the energy industry.
Interesting. Yes. And obviously, as we record this, Europe's having its own experience with conflict and energy and sourcing of energy. In this case, more gas than energy, and Russia and Ukraine. But it's been a constant fixture of the last few decades. Just to drill a little bit deeper on that one, Kellie, you talked about how your time in the Army enabled you to lead a diverse group of people. I mean, I imagine it was unusual to be a woman in the US Army back then. I don't know. How and I suppose over the last couple of decades, the US Army and armies around the world have been criticized around diversity, and women on the front line has sort of been one debate, but there are others. How would you describe, you talked about the diversity, how would you describe the diversity of the US armies in the 80s? Because I think there's this straw man of, it's this homogeneous group of kind of, meatheads with M16s. But how do you describe the diversity of the US Army in the 80s?
In the 80s, not very diverse. It was very unique officer in the military at that time. I was on one of the biggest bases in Germany, and I think I was one of probably 3 female officers on the base. So it was not very diverse, and it's obviously moving to a more diverse armed forces for the U.S. now, but at the time it was not very diverse. It was actually very interesting to be one of the few females there, and certainly had a lot of dating opportunities.
and probably good preparation for the oil industry of the 90s in Houston as well. It was okay, interesting. Could you say a little bit more about how that experience impacted your worldview? I mean, was it about the relationship between energy and conflict and the importance, or what do you think? What have you kept with you today when you think about how you analyze global affairs and what's important in the world and those types of things?
Well, drawing the line, actually, I was in Europe when we went to the first Gulf War, so I can remember getting combat ready, and I was in the 8th Infantry Division. I can remember they were deploying and activating the other units in Europe to go over to the Gulf, and we were actually left in Europe as the staging area to send supplies over to the Gulf. And so the 8th Infantry Division stayed there. We were ready to be deployed at any minute, but I realized the importance of, and the division realized the importance of, the people that are sending supplies to the front line. So I think it really fed on the importance of what we were doing from supply chain. And again, from getting the energy products over to the Gulf, and how everyone's role, whether you were in the Gulf at the time or whether you were still in Europe supporting, was critical, and everyone had to be ready to do their job at that time.
Yeah. Just one other question on the armed forces. So it feels to me, and I'm an outside observer, I've never lived in the US, but every election there's sort of much made about military backgrounds of candidates. I think Trump was sort of dodging the draft. Clinton was a similar one from recollection. Was John Kerry a hero? I remember these things. They made the foreign press. I can't remember anything about Obama, frankly. But how important do you think military service is as a grounding for a presidential candidate in the US, who in many ways are sort of policing the liberal world order?
Well, I think that it's a very important experience to have. I mean, the leadership experience is important, understanding of how the military works and how we use the military to maintain our global position, whether it be economic or, I think everyone can agree that a lot of our politics are based on energy now and maintaining our sources of supply. So I think it's important. Is it critical for our leaders? I mean, if you look back, there haven't been a lot of military leaders since, oh gosh, I don't know if JFK was the last.
Oh, really? He served. Okay.
Yeah, he served, and certainly Eisenhower. So I think it is a great grounding. It's not critical, and I think you see it less and less. And frankly, even in the business world now, people, I'm surprised that I don't see more people with a military background in the business world that I'm in. I think it probably is even more important that you have a grounding in history, because I'm a pretty firm believer that history repeats itself, and understanding how we got into previous conflicts and ultimately how we got out of those conflicts is, and the specific details of them is probably even more important than a military background.
Okay, interesting. So not overwhelmingly relevant.
Yeah.
Good. Okay. And the other part of your background is Enron in the 90s. And it strikes me, I've said this a few times on the podcast, but the number of guests on the podcast who tend to be leaders in the industry who were at Enron in the 90s is very high. And of the guests who were in the sector in the 90s, a big chunk of them were at Enron in the 90s, which strikes me as, I don't know, maybe that was the only place to do like competitive wholesale markets in the 90s. Or so maybe it's not that it was a great training. Maybe it's that it was the only place you would actually find anyone who was in the industry that long ago. But what was it, assuming it was a great place to develop your knowledge of the power sector that then produced a bunch of leaders, what was it about the company and the environment that made it this nursery of leadership talent in the industry?
I think nursery is an interesting description. So
it didn't feel like a nursery at the time.
When I came out of business school in 95 and the class of associates that we had in 95 have gone on to be leaders, CFO of AEP and lead Morgan or JP Morgan's trading business, lead Citigroup's trading business. I mean, these are the people that I came in with at an associate level. So I would say that class specifically has gone on to be very successful. And in general, well, obviously Enron went bankrupt and some people had some problems. By and large, the people that I was working with at that time have gone on to be very successful and stayed in the energy industry. I actually just was sitting on a plane next to someone with whom I worked, and he started a multi-billion-dollar fund that invests in something kind of ancillary to the energy business. So the people there have gone on to very successful careers. I think a lot of that, personally, when I think about it, is that we were in the business of creating businesses related to energy. If you look at Gas Bank, I mean, Skilling came in and he created Gas Bank and essentially had the first reserve-based lending. I mean, created that business whole cloth. So we were in an environment where you could look out and see an opportunity and create a business. And when you look at electricity or power trading, it didn't exist before Enron. First, we created the natural gas trading so that you could actually, as a producer of gas, hedge forward the price that you would receive. I mean, that's pretty fundamental to what we do now in the business. Then going and creating a power trading business and actually working, I can remember, and I won't give the names of the people because they might not want their names out there, but having people sitting in rooms coming up with the rules for how the PJM market would trade. I mean, this is nascent. Wow. I mean, this is like, it's not even trading. And we're like in a room writing up how we want this market to trade. So coming from that background, I think is what has led, that group of people to go on and do really amazing things. And if you look at now in the business, one thing I worry about in the business is that there's no associate pools. Who is going to come, after me, or really after the people that have come after me at this point, because we're not training those people. We're not training. If you look at my personal experience, I mean, I was trading cash power in New England and New York, and I understood how it moved, and I understood what it meant to put, 4-unit contingents on the trading and fill out those ridiculous New England ISO trading forms and submit them. I mean, I understand how power flows, and I don't know where you go now to get that broad-based exposure where I used to drive around New England and meet with all those. I literally would fly into Boston and drive around Vermont and New Hampshire and talk to all the munis and co-ops. And so that experience, I don't know, really exists any longer. And I think having that kind of basis in the energy business is what has created the group of leaders that you've seen come out of Enron.
Interesting. Just to digress on 2 points there then, how, and this is actually another theme that's been on the podcast in addition to Enron's leadership, how important do you think a trading background is for someone who's now in the C-suite of a electricity utility? How important is it that that chief executive or CFO has spent a couple of years of their career trading power or trading gas or something?
Well, certainly it could depend on what markets you're in or what type of utility. So if you're talking about an integrated utility, I think certainly being the CEO of Southern Power, you should understand the fundamentals of trading, and that is a great exposure to have. But if you talk about a wires utility now, like Encore in the Texas market, probably not that important, right? Yeah. But integrated utility, I mean, if you're at AEP, understanding how the traded market works, and certainly Jim Robo, I was at NextEra for some period of time. Jim Robo was very smart, understood that traded market from his background at GE. And so I think it's fundamental. You have to understand how these products trade, what contango and backwardation mean in the natural gas market and the relationship that has to power prices. So I think it's pretty important.
Okay. Yes. Interesting. I say the same thing about kind of fundamental modeling of the power sector, although I think people doing long-term modeling have less of a track record of making it into the C-suite. I think that's to some extent temperamental. The person who likes playing around with a long-term model isn't necessarily the same skill set to more broadly, but I think it's great grounding, thinking through the merit order and competition and all of those types of things. One other question on this. Do you see a permanence in the rules that were developed? So the rules for PJM or for ERCOT or whatever developed in the 90s, 2000s, was it, and I'm sure at the time you kind of think, okay, well, let's see, if it's not working, we'll change it. If it is working, it'll survive, kind of thing. But do you see a lot of those decisions, which at the time probably not much thought it went into and were to some extent arbitrary and expedient because you're creating a whole new market, are still around today? Do they look familiar to you 20 years on?
Oh, absolutely. Yeah, I mean, that's the thing. I think you have to be very careful when you create these markets because the change is difficult, right? I mean, status quo is easy, and you have to have a reason to change. No one says, what's the reason we did that originally? Oh, I don't know. But if you want to change it, you have to have a reason. And so certainly there have been changes and inefficiencies. People seek to remove the inefficiencies and the unjust aspects, if you will, of the markets. And if you see that something creates a problem, certainly if you look at the California market in 2000, 2001, and the way you could manipulate the rules, if you will, I mean, certain things need to be changed. Yeah. But by and large, you have to be careful how you start a market because it's certainly, you're going to have to work pretty hard to change the initial rules. So there's a lot. And it's funny sometimes I look at deals that come through for board approvals, and I'll just, have a flashback to, 25 years ago when I remember that rule.
They're still doing it. Interesting.
Yeah, still doing it.
Yeah. Okay. Interesting. It's there's little discussion, certainly on this podcast, of governance and how rules us, the rules as they are, but it's sort of, what do you need to change a rule? I think is a topic that hasn't had much focus on it. I certainly see. I'm not an expert in any particular market, but I see a lot of different markets, and the way in which rules are set actually, I think, can often have an impact on the speed of change and where markets and to what extent is it about market participants, to what extent is it about central government and these types of things. Okay, excellent. I'd like to talk about EnCap now in particular. So can you say a bit about, I described EnCap as an energy transition investor. Can you say a bit about EnCap's natural scope? It's such a big space. What do you rule in? What do you rule out?
When we went out with Fund One, we were a first-time fund, at the time, and so the question was, well, what are you going to do? Tell us your track record. We didn't have a private equity investing track record. I mean, we've done a pretty good job so far, I'll have to say. I mean, we had a realization on the Broadreach platform, sold down 50% of that to Apollo at a nice multiple. But we went out to the market. We said, here's some things we're not going to do. We're not going to do unique technologies that are not proven. Right? We're not a VC firm, so we're not going to make those types of investments. We're not going to do kind of binary. We're not going to do geothermal. We're not going to take the risk associated with resource that you have in geothermal for low returns. So broad-based, that's what we went out and told the market. We told them, the list of things, in fact, we would not do. So now that we look at Fund Two, we do still think wind and solar, straight down the fairway investments. There is so much investment that's going to have to happen for the U.S. and globally, actually, to meet the targets for renewable penetration. So we still see a lot of room to run there. And actually, in Fund One, when we put Triple Oak together, frankly, it was because we saw there were no more pure play wind developers out there. So I went out to Jesse Groner, who was leading Avangrid's development, brought him on board. He's built out a great team, and they've got a really good development pipeline. So for Fund Two, when we look at that, we'll continue to do what we do, which is invest in top management teams who have a strategy to build a development pipeline and operating assets, and then ultimately we bundle all that together and sell to a lower cost of capital, strategic, large oil, lower cost of capital fund, infrastructure fund. So some new themes that we think are really interesting. I mean, electrification of mobility, and we've been looking in Fund One to find the right investment. We haven't found the right investment to date, but we're continuing to look at, whether it's fleet, charging, different aspects of that. But obviously, it's going to be a big part of what happens in the transition on a go-forward basis. Interested in carbon capture. We have one investment now called Arbor Renewable Gasoline, and they have carbon capture as part of what their process is to lead to lower carbon fuel standard credits that they will be selling into the California market. But just CCUS in general, we think could be an interesting opportunity. Service business for offshore, potential for offshore. That's a different check size and a little binary. So we'll see how we want to participate in that, but we've looked at a lot of different ways on the service side to participate in that market. So there are a lot of opportunities, and we've gone through about 250 different opportunities at this point, and we select about a handful of those, obviously, on a go-forward basis.
Yeah. No, it's interesting. The offshore does, in many ways, has some of the characteristics of oil and gas, right? I think they're increasingly sort of big check sizes, increasingly sort of global super majors. They're nowhere near the size, but they're certainly a lot of the European offshore developers would like to think of themselves as on the trajectory towards that. And I just reflecting on what you said. I mean, you don't need to believe in net zero. If you do the maths, it's like you don't need to believe in net zero for there to be a massive increase in onshore wind, solar, all the stuff we've been doing. I think one of my colleagues told me PJM's at about 6% renewables penetration at the moment. There's a lot of renewables to be built, and it's getting more complicated, which I suppose plays into that all equity piece.
Well, think about this. I mean, what's interesting is, if we look maybe 5, 8, 10 years ago, that, electricity demand is going down, right? Appliances are getting more efficient, and where we've kind of peaked at electricity demand is going down and going down. And now, obviously, with all the Bitcoin and those types of data centers, that demand combined with electrification of
Transport,
mobility,
heat.
we've seen nothing but growth in the electricity sector with coal plants coming offline. So it's actually a great time to be in this space.
Do you think on that sort of all equity perspective? I mean, it feels to me like our industry is dominated by infrastructure funds that want, long-term contracts, debt, reasonably high levels of debt in projects. I don't know what the ratio of capital is, but it feels to me like it's 20-1, right? It's sort of, at the moment you can raise a 10 billion, the BlackRocks and CIPs and others of this world can raise $10 billion funds. A lot of the big guys are actually TPG, Rise, all this, raising these big funds, but it's a sort of, I don't know what returns are being offered, but sort of long-term contracts and high leverage. Why is it that and so it wouldn't surprise me if there was a lot less competition in the sort of higher equity space. Why is it that that's where all the capital is flowing? Is that just the nature of capital markets, and there's just more pension funds in the world, or do you foresee a rebalancing or something that could trigger a rebalancing?
Yeah. We do see that, we've gone out for leverage on our battery storage companies. And in fact, after Storm Yuri, several banks didn't want any hedges on the assets. So I think you have a dichotomy of the old way of thinking about it, that a hedge is security, is less risky. And then the new way of thinking about it, maybe you're going to get less leverage, right? But it gives you less risk when you have something like $9,000 prices for six days straight, and so I think it's a market paradigm, and it ebbs and flows. We'll see if it changes to more of a merchant base. I think we have seen some transactions, the Intersect Power, which wasn't wholly merchant. Certainly they had some products around it in the front end. But I think from our perspective, long-term contracting has not been very interesting for a long time, right? If you look at PPAs, and whether it's wind or solar, they were just a elevator to the bottom, right?
Yeah, you're foregoing a lot of value when you
and you're assuming you're going to make it in the uncontracted piece once you get out of it. And I think people will realize they're much better off in a not contracted merchant basis, especially if you're going to take more risk on. Okay, you're going to contract, and you're going to contract at the hub. Now you have basis risk and no return. So but back to the question, I think that the market still, whether it's kind of the pension fund investing, still has a little bit of a myopic view on what risk is and what contracting can do to ameliorate risk. And it's not always based on reality. That
sort of merchant exposure at the back end, I've heard it put as, would you rather take merchant risk now or merchant risk 20 years from now? And I think most people would answer merchant risk now. I just reflecting also on government, at least in Europe in particular, and to an extent with the tax equity in the US and various other schemes, I think there's an increasing desire from government to use price signals to get good outcomes, or a recognition that government doesn't know enough to be able to procure. I think in Europe was like, okay, when we get to 30% renewables, that's a no-brainer. It doesn't matter where they get built. It doesn't matter. There's a bunch of, we don't really care when we maintain it. But I think increasingly government's view is we need prices to tell people where to build, what technology. We want the private sector to work out where to build and what technology to build and how quickly to build it. And so I think there's also a push from the government sector towards more market exposure to achieve social goals. It's interesting.
Is that across Europe, or that's UK, or?
I think it's everywhere. I think you would, as an example, Portugal had solar auctions recently where developers were paying for the grid connection in order to take merchant risk. It was so attractive. Where wouldn't it be the case? No, I think there is a, and even within kind of CFD schemes, it used to be that you'd have a feed-in tariff that isolated you from all of the risk. CFDs now, you pay for your imbalance. In France, there's a sort of covariance risk or a price cannibalization adjustment that punishes you for building in the wrong space. So I think it's happening in a lot of the markets in general.
Yeah. Mm-hmm.
Good. Just one more question on the focus of EnCap. This is more of a philosophical one, but you talked about your familiarity with the grid code and having been around at the time. And I mean, it's obvious to me that this sort of knowledge helps you make better investment decisions. So how do you think about specialization within market versus specialization within technology? So let me give you an example. Do you think a US or a North American, say, just to take it to the extreme, say a North American, Mexico, Canada, US focused solar fund is going to perform better than a ERCOT focused energy fund or a PJM focused energy fund? Which specialization is more important, the market or the technology?
Mm-hmm. Frankly, I think it's more about the specific investments you make, right? If you could be just ERCOT if you make the right investments. And having spent some time in Mexico, I don't think there's any good investments you can make there.
The right investment is no investment.
Yeah, I don't think that's going to be helpful. So we're more about the specific investment itself and getting the right resources to assess that. And the way we've put together our partnership here brings in a lot of different capabilities. Jim Hughes, one of my partners, has developed projects all over the world. I focus on markets. I understand US markets. I've worked in the Chilean market, the Mexican market. There's specific markets I understand. If we decide to go to Asia, I bring in a resource to help me understand the market, but we're always assessing market in every investment that we make, and then all the different aspects of development in all the different countries, and then operational capability. One of my partners, Tim Rebhorn, has been in operations for the last 30 plus years, and he understands when he can look at something and say that O&M isn't right, that's not going to work, that's not the life of that asset. So it's really more individual opportunities rather than even technology or market specific.
Yeah, interesting. Yeah, and the Tim example, but I think also across markets, there's quite a lot of pattern recognition. The physics are the same, obviously, of power generation, and they go under different names, but you go to a market and a natural, and so as I say, I see a lot of markets. How do you keep the lights on? Is it energy only? Is it capacity? Is it an obligation through load serving entities? They're all variants on the same idea. Next question: how long is the tenor of the contract? What can participate? New build, existing. You sort of there's a bunch of permutations, but once you've worked out what's universal and what's market specific, I think you can be in a position to ask the right questions quite quickly without necessarily knowing the grid code, for example. Yeah. Good. Okay, so I want to zoom out from EnCap and talk a bit about our industry. So you talked about the California power crisis in 2001. How far, if at all, do you think those crises set back the cause of market liberalization in the US and in California? And I suppose I note that there really hasn't been any major deregulated market added since 2007 or something. I think Pat Woods told me recently it's about 60% or something like that of US terawatt hours are in liberalized markets. So how important was that crisis for the process of deregulation of the power market?
Yeah. From my perspective, I think the California crisis impacted deregulation in California, but not really anywhere else, frankly. And I could easily get into a long discussion on, did people abuse that market, or were the rules just really, really poorly written? Because they're traders doing things that were allowed by the rules.
Yeah.
And so that's a longer discussion. So I think if you go to California now, I can't even characterize what kind of market that is, right? I mean, is it deregulated or is it it's an interesting hybrid. Let's just put it that way. And it's, we obviously participate in that market through several of our portfolio companies. So we're active there. I think there are parts of the country that it's hard to find the gumption, if you will, for market participants to change it. If you look at the Southeast, you look at CERC, prices are some of the lowest that you can get on a retail basis. So, people, all the politicians work for the ratepayers, right? Ratepayers should be happy. So I'm not sure we're going to see much change there. Yeah. There's really no reason, especially when you have a company like Southern Company who's benefiting and in charge and keeping rates in check. So we may not see deregulation in that market, although they're talking about it now. Be curious to see.
Okay, interesting. Good. Yeah, no, we had just on this topic, we had Peter Crampton on, who's a professor. He was a director of ERCOT until recently. He said a similar thing about one of the leading experts in power market design about California, and they just got the rules wrong. The way they would, the way congestion worked. I wasn't around at the time, but the way congestion was worked in that market was a major problem. So more recently, Storm Yuri in ERCOT in Texas last year. I've never seen prices like it. It was 4 or 5 days at 9,000, ancillary services at 20,000. Is that having an impact, do you think, on Texas? Are we yet to see where that ends up? Is it throwing back the cause of kind of progress in market reform?
Honestly, haven't really seen that. They moved the price cap down to 5,000, as you know. And so the inability to go to 9,000 has had some impact, but there's also prices are up on natural gas and also the risk. I think people hadn't really looked at a risk like Yuri before. There's still a lot of concern around the capability to weather another event like that storm. I think it's interesting because initially you couldn't get one of those fixed shape hedges for renewables and no one wanted them. And now I'm actually starting to hear people are going, they're looking at those again.
Oh, wow.
I was a little surprised by that. So I think it may be a very short memory that people have on that. There's still, we came back with weatherization and units being prepared. We'll see. I think right now still see liquidity in the market, a lot of activity. And haven't really seen any move down, aside obviously some retail providers got hit and went away, but that market is kind of open for that type of thing to happen, right?
And it is an interesting, possibly in a good way, the sort of governance, sort of Governor Abbott, banging the table and demanding things, but actually a few bits and pieces have been done, but the can on some other things has been kicked. Perhaps it's a system where everyone's happy with the can being kicked down the road on some of the more radical reforms, charging renewables, those sorts of things that sort of will just, push it until it goes away as a topic. So maybe it's governance working in a good direction. And for listeners on the fixed shape hedges, just what was happening was basically often tax equity in the US would say, hey, we'd like you to sell forward a fixed shape of production out of your wind farm. And of course, a wind farm doesn't always produce that shape of power. In fact, it never really does. It's just a guess. So the problem is if there's a storm and the price is $9,000 and your wind farm's not producing, then you're on the hook for that power in the market, which is the problem. It was more common to do it in winter when the prices historically hadn't been high, but that was that caused some people some problems.
Yes.
Okay. ESG investing. So that's, and actually in the last few months, this is a topic that I think is being increasingly scrutinized. I think until maybe 6 months ago, it was sort of anything positive that anyone could say on ESG investing was taken well by the market. We saw, I think, pretty good multiples on certain stocks that were pure play renewables developers and those sorts of things that have come back. The Deutsche Bank, I think Deutsche Bank DWS in Europe, there's a big sort of regulatory probe there in general. So where are we? Like in terms of maturity of measuring and evaluating ESG, which to me is kind of the core of this. If we can measure and evaluate it objectively, then people can make decisions. But it feels like we're not measuring and evaluating it as objectively as we'd like to. Where do you think we are on the whole ESG movement? How close are we to where we need to be?
I think it has picked up a lot of steam in the last, call it 12 to 18 months of really, we're getting a lot more inbounds on like, we want to see your metrics. We want to see what you're doing, your plan, and here's your questionnaire, here's your answer, because of the scrutiny around greenwashing, right? People saying this is what I've done. I think the market's also understanding now ESG is ESG. It's not just E, because for so long it was, oh, well, if we do some renewables, we've met the ESG. And it's like, no, there's D and I, and there's a lot of different aspects to ESG. And it goes to the adage, right? If you don't measure it, you won't achieve it, or you're not really doing it, right? So it's a matter now of measurement and reporting, and then investors. So our investors, our limited partners, coming back to us and saying, okay, we want your metrics. We want to see your metrics. And especially when you work in the investor class that we do, we have a lot of endowments and pensions, and those organizations want to see your metrics. So I think that we're turning the corner on that. And I think that it's becoming much more real. When I was at Pattern, 5 years ago, we had an ESG person. Everyone's like, well, what's ESG? But now, there's no one who doesn't know what ESG, that when I speak to someone.
Okay. So it sounds like you're a little way to go, but you're an optimist on the
I'm an optimist,
of travel. Do you think it's possible, and particularly with a view on sort of the investor base, the pension funds and those types of things, do you think it's possible for infrastructure investors to straddle the worlds of both fossil and non-fossil assets, or is the message just too hard to convey to your stakeholders and investors?
I think it's possible to have a fund that straddles both worlds, but at this point, I guess I would query why. We specifically at EnCap kept our vertical in the upstream, we have a vertical in the midstream, and we have our transition fund. And we have different professionals. We didn't repurpose upstream to midstream or anyone from upstream or midstream to transition. We took people who had long-term history and capabilities and track record in each of those different verticals and have them leading those different funds. So from our perspective, that's you would prefer not to put them together. They have different return profiles, and really no reason to put it all in one fund. Plenty of opportunity in either of those. Yeah, interesting.
Excellent. Okay, so I like to conclude the podcast with a final section that I title Overrated or Underrated. And it's where I present a concept to you in the energy transition and ask you if you think it's overrated or underrated. The idea is that it's easy to say something's good or bad, but the way you make money in investing is you find something that's overrated or underrated. So relative to where the market is, what do you think? So let me start. The role of markets in decarbonizing the power sector. Do you think it's overrated or underrated?
Underrated. Yeah, I think it's critical. We need carbon pricing in the U.S. Absolutely.
Okay. And you wouldn't government dictating like a tax credit regime or something like that, you think is inferior to an extent, or is
absolutely. Yeah. Let's put a price on it. That's how we're going to change things.
Yep. Second, the role of gas as a transition fuel to a low carbon power sector. Overrated or underrated?
Overrated. Don't need it. I mean, with renewables and storage, we don't need a transition fuel. I'm not saying take offline what we already have. We just don't. I wouldn't put any more on. We can do that without gas.
Interesting. And when you say storage, are you talking about lithium ion or are you speaking more broadly?
Mostly lithium ion, but certainly, in the markets with hydro or other long dated storage, some of the other technologies.
Okay,
well.
Interesting, and appreciate the forceful response to that one. Okay, third, the potential for batteries to replace networks in reducing congestion and integrating renewables.
That's probably underrated.
Okay.
Yeah, I think that there is a lot of capability there. Battery as a replacement for upgrade.
Yeah. And it's funny, right? It's kind of second nature when I talk to Americans because, a nodal system prices the congestion. But so it's like, of course, it's not called easing congestion. It's called finding a great node and putting a battery at it. But in Europe, where you've got a single price per country, there's networks and there's power hub prices, and there's nothing in between. So it's a more novel concept. Okay, and finally, the US's ability to hit net zero emissions across the whole economy, not just the power sector, by 2050. Overrated or underrated?
That's overrated because I don't even know what it means. I don't even know what to think about these prognostications that these oil majors, et cetera, are going to meet, or these industrials are going to meet that target by 2050. I'd rather give me your 2025, your 2030 target, and don't talk to me about 2050 because I can't get my head around it.
Okay, excellent. That's good. So in saying that, presumably, if I'd said, do you think these big oil and gas companies committing to long-term net zero targets well beyond their current board or executive will be there is overrated or underrated? Presumably you would say you think that's overrated as an idea.
That's exactly it. Yes.
Okay. Good. Excellent. Well, Kellie, that's a great note to finish on. It was a real pleasure to hear your unique perspectives from a very varied career in the power sector and the military. As I think we both agree, you've got a lot to get going with in terms of developing the technologies we have. So, Kellie Metcalf, thanks so much for taking the time to speak.
Thanks, John. Appreciate it.
That was John Feddersen, founder and chief executive at Aurora, speaking to Kellie Metcalf, managing partner, energy transition at EnCap Investments. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening and goodbye.